Hello, today is Friday the 30th of March 2012. This video is entitled The Case for $237.50 silver, and we're going to go through the reasons why I came up with that exact number. And it's a long-term video, got a lot of information, going to look at a lot of old school silver charts on the monthly term time frame. 3 historical charts and the current one. And right now we're looking at the yearly charts. Each one of these candles representing a full calendar year. We have an 18 moving average of highs, lows, and closes. All the moving averages will be front weighted. The Fibonacci retracement, which is from this high, this low. And the upper and lower bands, which are designed in a way where it's hard to hit and extremely difficult to maintain movements above the upper band or below the lower band. When I look at this chart, I look at this and I often think, well, you know what, this is a pure example to why these technicals can work on the long-term perspective, not just for day traders, tick-by-tick traders, because if you are a long-term trader, you'd be using yearly, quarterly, and monthly charts within this type of analysis. As if this was a 1-minute chart, which means you're a tick-by-tick trader. Imagine some of the things that you'd be doing. Okay, on the way down here, you might buy here. And depending on how far this went up, you might have sold a little bit, but overall this is a losing bet in here. The second bet, this would have been on a short-term scalp, this was a perfect bet. You buy here, you sell here. And if you were playing this to buy in positions, you buy here, you sell a little bit here, you rebuy back what you sold, which really increase or decreases your dollar cost average. And well, just imagine if you did do that. Look how long you have to wait. Like, this would be very impatient to go almost a half an hour, like 20 some odd plus minutes, having to wait as it just goes through this line. Now, you'd be looking at prices at like $101.10 and $101.40 or whatever, some lower variables, as that's the day trading part of it. But you'd just be going on forever. So like 10 years of it just really going sideways before it finally broke free. So let's go to some older charts. Let's go back to the past. We're going to go back to 1978 this year and here. It's a monthly chart, and this is at month ending October of 1978. Alright, so what would I have been saying back then, or just based on this chart period, what would I have been saying? First of all, did you notice what never happened? We never had support at this level. That's very uncommon. In fact, right in here, I probably would be saying we are going to 357 silver. It's almost like a lock. It's a gimme. Really? No, it didn't happen, but I know for sure just by looking at the pattern that I'd be so convinced that that would be the case. Oh, but no, it just went up, and then now it broke above, and it's neutralizing, breaks above, neutralizing, and notice in here how it's held above it for a significant amount of months, which is really changing the synopsis of the trade. And within here, if you're looking for any time to get in, including this position, it seems so definite that it's going to be going higher. Now, what price objectives would have I said? Where do you think I would have said breaking this level? Where would silver be going to? What price level? The high was $6.76, and the answer would have been that of $19 silver. Now, here's the reason why. When you have a breakout, I look at the Fibonacci variables, and I would say, well, where is this level going to go towards? And I'd say this line's going to go up here, which would mean, does this line match up down in there? And it would have. So within the levels of this low, which is $1.27, if the high would have went to 19, then the 2 Fibonacci levels would have been here and here. So that would have been the reason why I would have said on a breakout pattern, 19 is the next target. So let's go to 1980 now. And this is what the chart looked like. So obviously it pretty much just exploded. And I left you off somewhere around here, somewhere around that little breakout. And the thing just kept on going. Now I said 19 would have been where it would have went to, because then this line would have came down here, and this line would have been here. Well, it went higher than that, obviously going to $50. So the bottom line is 19 would have been somewhere in or around here, I guess you can say. So therefore, when the market got up here, you'd be like, oh, time to sell, time to sell. In fact, you would have been waiting here, but it would have missed. So you sell not everything, and maybe even a decent amount at this time frame. And, oh, wow, it keeps going higher. What I usually state, and what usually happens, not in this case, but what usually happens, if you don't find resistance or even support at a level that you're supposed to, and it just keeps skyrocketing, there's some major forces going on, and you got to expect it to go to the next level. Now, the next level was $101 an ounce. So as it was going to 50, it would have been getting close, only needing to double one more time. After all, doubling is something it did quite often during this run. But all it would have had to do was go up to that point. Now, of course, the reason for the 101 is for the this previous support level to move up within... how did it work out? Yeah, just to move here. For this line to move here would have meant $101 silver. That was it. And then this line would move up to 19. This line would have moved up to 19. So that's why 19 consolidation point at this point is critical. Because you had this big move and you did find support at this level perfectly. So therefore, you find the support. Is it going to continue to go further? Now, it's a pretty tremendous size move going from 50 to 14. I wouldn't have liked the fact that it broke 19. That should have been the level, and that's a big enough correction in itself, going from 50 to 19, losing half of its value. But given the volatility movement, it would have been kind of standard as well. And breaking below this on the next support level, well, the chances aren't as good. Where are we going? That's the next support level, which of course did come into play. Alright, so we've seen back then. Now let's go to 2004. This is February 2004. Now this is a choppy-ish looking kind of stock, to say the least. And this was a 1997 failed breakout. We've seen the price go from 4 up to about 8, so pretty much doubling in about a year. And then it didn't find support where it was supposed to. Where was it supposed to? Either here and or here. It's chopped above and below it, and then eventually broke down below. So that definitely constituted for this to become that of a failed move. Okay, so now what happened since this bottom point is, and by the way, the Fibonacci would have been even higher. It would have been from this low to this high instead of this one. So, and it wouldn't have been much of a difference, but either way, the lines would have been just a little bit higher when it was retracing lower. However, on the way up, you're using this breakout low, or the big low of 397, and that's going to be an important number as we move into today's chart, as well as this high. So in this situation here, you find resistance appears below where you were supposed to. And if you look at the Fibonacci, just eyeballing it, this high to this low and this breakdown, that is so 61.8% retracement. So a successful retracement that stayed within the band. Then you come up to it again. This increases the chances that you take it out. Well, guess what? It took it out and it went right to this level, where you're supposed to find resistance. But and we had January, it went there, it broke right through it. Yet this month it had a period where it went below the 610 level. But it's looking like it wants to continue going. So what we know is that when you don't find resistance where you're supposed to, you're probably going to go to the next level pretty fast, or it's going to just be the big moves are happening, forces are going on that you may not understand. Well, in the situation here, if you're buying at 6 2/3, 667, and you're looking at how you did today, well, obviously it was a good situation to buy. Now, what ended up happening was it actually continued to extend its gains and then come back to support. It actually came up No, not like that, but it came up to about here and then back down to this previous level of resistance. And so you could end up buying at 667. You see a good pattern because it's up 4 months in a row. You might say, I'd hate to chase it when it's going up like this, but you also have patterns that aren't normal that is still showing signs of it going bullish because there was no resistance in here. It still has retraced because you can see the lines, and it's moving up further. Okay, final chart is the current monthly chart. And the month ended today. The month of March came to a close. We lost 6 2/3%. And we will make the case within this chart for 237.5 silver. And before we do, let's just take a look at how the price action is worked out. Question is, does it make sense from the 397 lows? Because what lows am I going to take? Yes, I could take these. But it's just part of the retracement within the trend that hasn't been broken, and this support level is like here. It's not too much of a miss for it to say it has any precedence right now. But within the 397, it's decently average here because you got this low band area and you got this. But quite frankly, this 61.8% is amazingly at a huge level of resistance. And like I say, if we drop below, that's the area that you should be going towards. But here's the kicker now. We've already established this low in twice, and just by looking at this, we could pretty much tell that it's 76.4%. But let's find out what it is to be exact. To find out the Fibonacci, we take the high, we divide the low. So the high is 49.81, the low is 397. We do this to the power of the 76.4% variable, multiply the 397 low to give us the downward price objective at 27.42, which is pretty much where we see that 27.54. Okay, so we've had support at the 23.6, or the first significant fib level. Therefore, breaking this trend line and coming back to this previous resistance of 50, which we did test in 1980, would increase the chances of it being taken out. So where would I think it's likely to go? Well, I would think that this line would meet up with this line. Plain and simple. Now, it may go lower. Maybe the white line only goes up here, and then maybe the other one goes down below, and my price objective is lower. But I would rather, or not rather, but it would be more common for this significant level to go here, and most likely this line would move up here. Well, let's find out exactly what the Fibonacci levels would be if, of course, it's $237.50 silver. We'll divide this number by the low of 397. Because we're going to calculate a couple of these, we'll push the M plus memory plus button. We'll put this to the power of the 38.2% because this is the 38.2. So this moving up here is what I want to find out. So we put it to the power of 32 and then by the power of it and multiply the low of 397, which gives us a price objective to 18.95. 18.95. Now, as far as the other number is concerned, this 61.8, if we take the number again and put it to the power of 0.618% and multiply the low of 397 again, we get a price objective to 49.76. Yeah. So it would make a lot of sense that that's where it would go. So that would be the price objective. So looking at this is, well, what time frame will we be looking at? Well, it seems as if it could easily take how many periods on this chart? We're looking at a 100 chart or a 100 tick chart. It could take 100, and realistically, they usually take anywhere between 8 to 40, 8 to 60. Maybe even 12 to 100. But again, it could easily be 6, 7, or 8 when we look back at how the volatility just boom and then makes that look tiny. So therefore, it's tough to say, but if you're talking 8 to 30 months, you're talking the next few years though. Okay, I'm losing my voice here as well, so I'm just going to end the video, and thank you for tuning in. Bye-bye.